Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 11th, 2008. Well, the volatility on Wall Street continued today, folks, as the overall market conditions deteriorated in one sharp drop as the Dow fell 206 points, the Nasdaq was down 55, and the S&P was down 22. Across the board, that was an average of 1.7% to about 2.25 on the Nasdaq, a very, very sizable drop. And this volatility in this market has really picked up over the last week or so. And we've seen that between big up days, big down days, and pause days with major volatility intraday as they rally the markets off the lows to close them almost flat. Today, that didn't happen. We saw the market sell off and close at their lows, which could be a little signal that we're nearing a possible bounce area. And we're going to look at that, folks, because we have been at a neutral stance ever since the volatility picked up last Wednesday as of the close, and on Thursday, Friday, Monday, Tuesday, Wednesday. And at this stage of the game, we're looking for a possible bounce situation. Though we're going to stay in a neutral stance, we're going to look for a near-term bounce, possibly starting at a support line that I'm going to release today in the video here. So again, what we're looking for is a possible test of a support line on the S&P, which once we hit that, we could see a nice little bounce in the markets. Alright, and as I'm going to release that right now, watch for 1329 on the SPX or the S&P as a possible major support line on the S&P, which could yield a near-term bounce in the market. Now, we're not talking about any extended bounce here. We're talking about a near-term bounce where you could see a nice day or two rally in the markets, or at least a small bounce higher, and the selling here that has been, ever since last Friday, really come to a pause or a little bit of a bounce. So keep in mind, 1329 is a major support, and we should watch that. Now, we almost got there today. Right now, we're sitting around that 1336 to 37 area on the S&P. Actually, to be exact, we closed at 1335 and a half. So really, we'll have to watch tomorrow. Do we dip tomorrow at some point? We're near that support line, but usually we like to see it tested, and we'll continue to follow that. Again, 1329 on the S&P. Now let's get into this market and talk about why this market crapped out today. Why did we see a major drop after so much volatility? Why are we having so much volatility in this market, period? Number one, oil. Without a doubt, oil is a major issue in this market. We had the last 2 days a drop of $6 in oil. Today we had a rise of $5 in oil. So basically you have a 2-day or 3-day drop, which is what we've been seeing, and then within a day or two they rally the oil back up huge and push it right back to the highs here. And again, we can look at the USO on the daily chart, and you can see that. You had a sell-off on oil here. 2 days later, we were at a new high. You got a 2-day sell-off here. A day later, we're approaching that high again. And continuing to see major volatility, major risk, although I still tend to think that, we talked about this in yesterday's video, you still may have a double top situation here, but we'll know better whether or not we take this high out up here. Alright, and you got to still watch for that to see if we do take it out. If we do, then we may go higher, but if they're not able to take this high out, you may see a fall, and I think the next fall takes out the low here. We definitely will bounce off that low as a double bottom near term, but nonetheless, should we come down here, I think we wipe out this 20 moving average very quickly and then sell off to the support line right here at the 50 moving average, which is the low from before. So keep that in mind, folks, and we'll watch to see, and we'll know in the next couple days. Oil's going to make a move here. It's not going to hover around this high. Oil, is not going to get complacent here and just stop trading. It's been too volatile. You're either going to see a push to new highs, or we feel we do see a fall in oil relatively soon, especially considering the government is on the attack now on the oil price front and the food inflation front. And this is stuff we were preaching 6 to 12 months ago, folks, at InTheMoneyStocks.com. We were saying, guys, lowering interest rates here, ethanol, all this stuff is going to contribute to a weakening dollar, a higher demand for products that feed cattle and go into ethanol production like corn, and it's only going to drive inflation, which is going to create the you're going to see the dollar weakening, which in turn is going to raise the price of oil here to astronomical levels. It's all come to fruition, and they're finally catching on. Bernanke and Bush, the two Bs out there that have a lot of power in the United States, are now talking about strengthening the dollar and how it's important that the dollar gets strong again, and they're finally seeing the light. Now, in all fairness, they've been in a tough position. I mean, you have the housing market collapsing, you have the credit crunch. What were they supposed to do? Leave interest rates and make it an even worse? So it's a tough situation. Unfortunately, they tried it one way. It's not working. It's causing even more problems with food and energy prices skyrocketing and inflation. And now they're looking to go the other way. I hope they don't shoot themselves in the foot twice, though. That's the only thing I would say. So in any case, it's a tough position, and I don't envy them having to deal with this issue, guys. I will take my hat off to them and say good luck, and hopefully they can do the best best they can. All right. In any case, let's take a look at the ES on the intraday level here, folks. You can see that really we were trading flat early in the day, and all of a sudden the market just started to collapse. And really look at the constant selling all day, all morning here. Constant selling ever since around 8:30 in the morning. Just constant red candles, a couple green candles in there, but they were nothing major. And then right around 10:30, 9:30, 10, you really saw some major selling come into this market. Then the interesting thing here is we got into this range right around 10:30 that we stayed in for most of the day. So I'm going to draw this in here. All of you guys can probably see this, and I love these little channels. Alright, and you can see that right here. You can see the channel that we were in. And then towards the end of the day, we broke below it and closed below. Notice the first candle here that closed below yielded more selling here. And off to the races we went down another little way. And then we started to form a little more, another sideways pattern. Tighter consolidation going into the close. So it was a really a story of a move like this here, and I can draw that in pretty accurately there. You had a drop, pause for about most of the middle of the day, and then a little bit of a breakdown into the close as selling really escalated here. And you can see the volume pick up into the close. But it's a beautiful chart for that reason and that reason only. And one thing I would want to say here, and I'm just going to draw this in, you can actually draw your line right here, and you can draw it right here, alright? So check this out, folks. You see that little trend line. They tried to break the market up here. Alright, but notice where it went. Alright, a lot of amateurs would say we just broke above this trend line because you notice we're connecting the ties of this candle and we just broke above it. Alright, well that's all fine and dandy, but what about the resistance point of this? Alright, and let's draw that in. And look at that resistance point. So you had the resistance point here. It basically reaches that and then reverses, and that's the trickiness of this chart pattern here. Not for the faint of heart. You have to be on your toes. You have to take small losses or small gains and just consider it a lucky play if you went long here on that breakout, fake out really of a breakout here, as you had major resistance coming up right in this area, even though it fooled a lot of people getting above this line. And again, you can see it, how it got above and then reversed, and you had a topping tail there. Not really a topping tail because it's topping tails happen at the top of patterns up here. It would have had to been up here in this area for a real topping tail, but nonetheless, the fact that they sold this all the way back down is a bearish signal, and then they reversed it right back into that trend, and notice how that line you draw straight through, they never got it back above that line. And that's a dead signal right there that you're going to see more downside. Comes down, hits this bottom area for about the 4th or 5th time, finally breaks down to the downside. So in any case, a very interesting intraday chart. I hope you guys are learning a lot off these intraday charts. Now let's look at the daily SPY, because we had that wild volatility where we shot up huge on Thursday, and people were throwing rocks at us and doubting our call for the downside. And then right at this point, we had gone into a neutral stance anyways, and we continue to be that just because the volatility is going to be out there. All right, it's going to be a whippy market here. In tune with having a big drop here, we're now looking for about a 60% chance of a bounce coming in over the next day or so. Should we have another down day, or should we touch that 1329 area on the S&P? Then we raise that. We're going to raise that from that point of 1329 to 1328 to about a 75 to 80% chance of a near-term bounce. And we're only talking about a small bounce here, but the market is near-term oversold at this point, and you have to think that at some point we're going to have a little bit of an up move, even if there is more downside to come. So again, a slight favoring of a near-term, meaning over the next few days, a possible bounce. But first, we'd really like to see that 1329 tested and see if that holds, all right? Once we get that sense, and if that 1329 holds, then I think that you have a good solid chance of a bounce coming in this market. So keep that in mind, folks. But nonetheless, you can just see the rally in this market took us all the way up here. You had a beautiful double top right here. And notice the double top. We love that when it takes out the high because that fakes out all the amateurs and all the weak hands. And I hope everyone's learning this so they don't make these mistakes. You don't get fooled by a little breakout on the first break. Wait to find out if it really does break, or does it just reverse right back down. And then you had the fall, bounce back to the 20, fall back to the 50, bounce again to the 20, and then the drop here. in the markets. Now, remember this other thing, guys. Look at the support area. Alright, so right now we're hitting the gap window-ish, gap fill on this chart. This is right where support is, and I pointed this out over a week to 2 weeks ago, saying this is where we were going in this market, and that's important. Go look back about a week and a half in the videos to 2 weeks ago, and you'll see this, and this is what we pointed out. You had major support coming right in here, and this is right around that area. In addition, this is what we're looking at here as a possible right in this area. Alright, we pierced the first area and we're coming down to the gap fill. That's going to be some decent support, and then you're looking at this area right below as being major support. Right between these two lines is major support here, and that's what we're talking about, that 1329 level on the S&P to be closely watched. Alright, guys, bloody day across the board. The financials got just murdered today. I strongly encourage everyone to come join the webinar coming on Saturday, June 14th. Go sign up today because there's not much room left. I encourage you all to do it. We'll talk to you tomorrow. Take care.